Hey guys, TommyBryson here, and today I'm going to tell you how do you find out how much money you need to invest or shares you need to buy to get to your goal of dividends every single month, or for example, every single year. So let's say your goal is to make $1,000 in dividends every single month. How do you find out how many shares to buy and how much money you need to have as a whole in your investments to get to that goal of $12,000 every single year? And by the way, currently right now, I'm making around $200 every single month in dividends. But in this video, I'll tell you guys about my portfolio, how I invest, most importantly, give you a formula to go out there and calculate for yourself how much money or how many shares you need to buy to get to your goal of making $1,000 per month or more or less, depending on how much money you actually want. And if you guys are new to the channel, I post videos every single day, so make sure to also subscribe and hit the bell so you're notified. And on top of that, also destroy the like button. I appreciate that a ton. Now, the first thing we need to talk about is basically, Tommy, what is this secret formula and how does it work? And do I require calculus, or is it simple enough to do with my phone? The answer is, well, the formula is simple enough to do with your phone. And on top of that, once you know it, you can do it with any company out there and find out, hey, if I buy this company, how much will it take to get to that goal of $1,000 in dividends? Okay, so by the end of this video, you'll know everything you need to know. And by the way, guys, do me a favor and be very careful when it comes to just investing into a company because they have a very high dividends, okay? Because in reality, companies are not stupid, so they know that, hey, if I have a high dividends, I attract new buyers, and then next thing you know, you're buying a company that's trash, but it has a high dividends, and before you know it, you lose a ton of money, and you can't justify how much they pay you in dividends. So always consider the overall company health and the history of dividends payouts before you go ahead and buy a company just because it has a pretty high dividend yield. That's not as important of how healthy the company actually is as a whole. Now, the formula is very simple. All you need to do is basically divide the amount of money you want to make every single year by the percentage of the dividend yield, and then I'll give you exactly how much money you actually need to make. Now, in English, this is what it means, okay? Now, by the way, if you guys don't know how to find the dividend yield of a company, all you have to do is go into your phone, into Robinhood, Yahoo Finance, M1 Finance, the Stash app, the Cash app, whatever app you actually have, Fidelity, Schwab's, it doesn't matter. They should all tell you what the dividend yield is for the investment you want to make. So whenever I go to Robinhood and I look up the company I actually want to find, for example, Apple, I click it, and when I scroll down, it tells me right there, dividend yield. And in this case is 0.63%. That is actually less than 1%. And some companies pay a lot more, like 2% or 3% or even 6%. But in this case, Apple is only paying around 0.66%. Now, once you have that number, which is 0.63%, what you want to do is basically turn it into a decimal. So to do that, just grab the number. So in this case, it's 0.66% and divide it by 100. And boom, you get the number. In this case is 0.0066. And that's basically in decimals percentages of what that 0.66% actually means. Now, once you have this number, all you want to do is just divide how much money you want to make divided by this number right here, and they'll tell you exactly how much money you need as a whole. Now, if you want to find out, well, Tommy, how many shares will I need to actually buy to get to this number right here? The answer is, well, whatever number it is, if it's like $1 million, just divide it by basically the share price. If it's like $100, well, in reality, you'll need around 11,000 shares. And by the way, do not worry. I'm going to give you examples with Apple, Coca-Cola, and also Bank of America, and that way you know exactly how to do this formula in action. But by the way, guys, there is one thing you do need to remember, and that is basically whenever you get paid dividends, it does not matter, you will still get taxed on that money. And taxes basically consider dividend income as ordinary income. So it'll be inputted into like your regular income, and then boom, you'll be taxed on it as a whole. That's the whole thing when it comes to dividends. So basically, if you have, for example, $1 million portfolio, and in reality, you get paid, for example, $12,000 every single year in dividends, well, that money is going to be taxed. So, for example, the way I like to do is basically, I like to find out what my federal tax rate is. For example, if yours is 24%, by the way, just look up on Google, federal tax bracket, and it'll tell you exactly what you get taxed under federally. In this case, let's say 22%. On top of that, your state probably has taxes also. Just add another 8%. So in total, it's going to be around 30%. So whatever the number I actually want to get is $12,000, just usually multiply it by times 1.3, and then you'll get around 15,600, which means that basically you have the tax already included. So if you get this amount of money after taxes, you'll get your goal of $12,000. And by the way, I did 1.3 because it basically means you're adding in an extra 30% to whatever number you actually want to get. So if you have $100, if you multiply it by 0.30%, it's going to give you 130, right? Because just like another 30% added. That's the entire goal. That way you don't have to go like back and forth and add numbers. That's why I did it the way I did it. But that's what you need to know when it comes to taxes and the formula to how to find out exactly how much money you're going to need to have invested to get to your goal of $1,000 every single month. Now let's put this formula into action to find out exactly how much money you'll have invested to get to your goal of dividends every single month. And by the way, guys, some companies out there don't pay any dividends. That does not mean they're bad. It means that basically some companies out there, they grab the money, they reinvest it, make more money, get you more value, which means your stock price goes up, which means you also get paid money that way also, okay? For example, Amazon, Berkshire Hathaway, Facebook, also even Tesla, all these companies grab the money and just go ahead and reinvest it. Now, let's get into the video, guys, and do this formula right now and put it into action. Now, the first step is this, okay? Whatever the dividend yield is, you want to turn it into a decimal percentage, okay? To do that, just divide the dividend yield divided by 100. To find the dividend yield, just go on Yahoo or, for example, go on Robinhood. We know that, right? So in this case, let's do Apple stock, okay? So right now, I'm going to go to Apple. I'm going to search it up on Robinhood. Type in Apple here. Found it. The dividend yield, by the way, Apple right now is trading for around $127, well, $128, $140. Wow, it's going up and down like crazy, okay? I can't keep up. But the answer is right here, the dividend yield is around 0.63%. So to turn this number right here into a decimal percentage, all I have to do is just grab this number right here. 0.63 divided by 100 gives me 0.0063%. So all I have to do the formula is grab the amount of money I actually want to make every single year. In this case, $1,000, right? Multiply it times 12 gives me the annual income I want to get. Divided by the 0.0063 gives me a number of around $1.9 million to get to my goal of making $1,000 every single month from Apple stock, okay? This is how huge the number is. If you don't believe me, a quick way to just work backwards is to basically just multiply it by 0.0063, which means a 0.63% dividend yield, as you guys already know, okay? So in this case, 0.0063 by that $1 million gives me $12,000 every single year. Now, if you want to find out, well, Tommy, how many stocks do I need to buy, or how many shares of Apple stock do I need to buy to get to this goal? The answer is, well, again, divided by 0.0063, how much money I need is around 1.9 million. So let's just grab this 1.9 million and divide it by the share price. In this case, the share price right now of Apple is around $127. Let's say 128, right? 128. So in reality, divided by $128, it means I need around 14,880 shares of Apple to basically be able to get that $12,000 every single year. But obviously, guys, okay, Apple's dividend yield is very low. The stock price is also very high. Some companies will require a lot less money to get to that $12,000 goal, so don't worry about it. Although it sounds big, it's just because it's Apple and they have a very low dividend yield. For example, if you did the same example, for example, with Coca-Cola, in reality, Coca-Cola pays around 3.29% in dividends, which means to get to $12,000, all you will need is around $364,000, which is around 7,319 shares, okay? So by the way, guys, I want you to practice this formula over and over again to find out exactly how everything works, and that way you get very good at it. And don't forget, guys, the formula is also linked down below. Again, all you want to do is step 1, turn the dividend yield into a decimal, so just divide it by 100, and then basically grab the income you want every single year, divided by the entire decimal, and then that equals the amount of money you'll need. To find out the shares, just divide that number by the share price, and that'll give you exactly how many shares you actually need to have in total. And if you did this, for example, with Bank of America, all you will need is around $437,000 to get your goal, because again, Bank of America pays around 2.74%, which is a lot more than Apple. Okay, Apple is only 0.66%. That's lower than basically the average high yield savings accounts out there. So in reality, if you want to do Apple for a dividend yield, it might not be the best idea, but for growth, maybe. And by the way, this video contains no stock advice whatsoever, so don't take, oh my gosh, Apple and Coca-Cola and Bank of America, these are all hints. No, these are just numbers I use to basically give you guys a way to actually calculate what you actually want to get. And by the way, if you ever get, for example, a stock split, it doesn't matter, the same applies, you'll still get the same amount of money, the same amount of dividends, okay? So don't worry about that either. But now guys, the final part of this video, okay? Tommy, how are you going to get to your goal, and what is your method, and how are you currently doing it? Well, the first thing you need to know is this, guys, okay? I do not invest into individual stocks. I rarely do that. And my only investment right now into an individual stock is basically into Delta. I bought it very low. It's pretty high now. It might go even higher, but the answer is that's the only investment I have into an individual stock. But all of my investments, around 99% of them, are basically into ETFs and also bonds. A lot safer, a lot less riskier, and pay me consistently in dividends, okay? So that's why I use ETFs and also bonds. If you want to invest the way I invest, I use ACORNs, and then when finance, I'll put links down below. When you sign up, you get $10 and also $5. And remember, okay, the portfolio I use in ACORNs is called moderately aggressive. And in M1 Finance, once you click my link, you'll get access to my portfolio also, and you know exactly what I also invest into there. Now, the simple answer is this, guys, okay? Right now, I'm getting paid around $200 every single month. But on top of that, I have a portfolio size of around $100,000. So in reality, I'm only getting paid around 2% every single year. But the accurate number is more like 2.83%. That's the real number right there. So let's say, for example, well, not an example, it's my real example right here. My goal is to get to $48,000 in income every single year. Now, as you know by now, basically, if I'm getting paid 2.83% in decimals, that's around, divided by 100, that's around 0.0283. So if I want to find out how much money I need to get to my goal of $48,000, well, 48,000 divided by 0.0283, well, in reality, I need to have around $1.6 million to get to my goal of making around $48,000 in dividends. Now, obviously, this number right here is incredible. It's awesome. It's a lot of money, and it'll take me probably like maybe years to actually get to. A lot more. And by the way, my portfolio of 100K is only around like 6% of the way there. So it's going to take me a lot longer. Maybe by the time I'm 30 or 35 or so, okay? That's the entire idea. But there is a second way to do this, and to actually have less money, less than this, and get paid the same amount, and also carry a little less risk also. Tell me, how does that make sense, and how does it work? Well, the answer is basically, it's called the 4% withdrawal rule. And it's basically an idea you actually get when it comes to retirement, meaning that whatever money you actually have, if you just withdraw 4% every single year, and that's it, reinvest everything else, the answer is you won't run out of money for at least 30 years, and that's only if you go, like, for example, into the worst market in history ever. But if that doesn't happen, in reality, you will never run out of money, because basically, if you get 8% return every single year and you only take about 4%, it means that your money keeps growing year after year. And that's the whole idea. So in this case, another formula, and the last formula, I promise, guys, is basically how much money you'll need to actually retire using the 4% rule, instead of just like, hey, I want this much money in dividends, right? So the entire idea is very simple here. By the way, a lot simpler than the entire like divide this by this and that, but no, this one's a lot more simpler, right? So in reality, all I have to do is just multiply the amount of money I want, $48,000 every single year, multiplied by 25, and basically tells me how much money I will need in total to get to my goal of $48,000. So in reality, I need around 1.2 million. That's around $400,000 less than what I would need with dividends, okay? Which is awesome if you ask me. So again, to double check this, all I need to do is just multiply this number by the 4% rule, because how much money I'm gonna be taking out every single year, right? So multiply by 0.04. If you put 0.4, that's 40%, okay? So 0.04 is 4%. In this case, that's going to be $48,000 every single year. So in combination, if you use the 4% rule, you'll need less money, and on top of that, you can retire a lot earlier if what you want to do is basically retire on dividends. But keep in mind, okay, you want to reinvest the dividends and let the money grow also. Once you get your goal of maybe 1.2 million like me, the answer is just take 4% every single year, and that is it. If you want more money, invest more money. And if you only take 4%, your money theoretically should keep growing over the years to actually come, which is actually awesome. Meaning that by taking money out, you still have your money growing over the long term. That to me right there is awesome. Guys, that's about it for this video. Hopefully it helped you a ton. And by the way, all the formulas are linked down below along with portfolio, and that you can invest the same way I actually invest. I'll see you guys tomorrow. Thanks for watching. If you like this video right here, well, like this video. On top of that, if you're new here, subscribe and hit the bell so you're notified. If you want to talk to me or text me, subscribe to my Patreon, link down below, or just DM me on Instagram at TommyBryson. And before I go, if you want to watch a video with all the details of my dividends, here's that video right here, and click my Patreon. I'll see you guys tomorrow. Thanks for watching, and as always, peace.